All right, let's actually talk how to think like smart money. Okay. Now, let me take you back maybe 3, 4 years in my trading journey when I first got introduced to the idea of institutional trading and all this sort of smart money concepts ideas. I got taught it in a very pattern based format. The idea that liquidity sweeps and FEGs formed and price should run away from that. Now, I had no idea about sort of the higher time frame context, how to actually frame a narrative, how to frame a bias. And to be honest, I really struggled when I first got into that sort of field of trading. What I quickly came to realize was you really needed a plan around what you was doing, and you needed some sort of overarching theme slash framework to actually guide your trades. Okay, and that's where I started to understand the idea of thinking like smart money. Okay, now I'm gonna do it from a very basic standpoint. I want everyone to be able to watch this, grasp this idea, and yeah, just be able to understand what smart money is doing and how they're operating. So the key thing you need to be thinking about, right, when we talk about smart money, okay, is order pairing and offloading. Okay, now technically they're actually the same thing, right, which I'll explain in a second, right? So let me just label that 1 and 2. So we understand, right? Let's say we're thinking about things from a completely smart money perspective. We understand above and below equal lows and equal highs is liquidity, right? But what does this actually mean? Well, what this actually means is that there's a ton of breakout traders who've got their sell stops, okay, resting beneath this low, and they've got buy stops resting above this high. So what actually happens here is when price goes ahead and runs lower, okay, breakout traders are getting entered into the market at this point. So if you have no sort of experience with support and resistance, sort of trend line trading, this is how a lot of them trade, right? Let's say this is a support level. They're waiting for a break of the support level. Once it's been broken, they look for a short. Okay, that's the ideology. Now at this point, as traders are entering short, smart money is entering in longs, right? And is treating this liquidity as counterparty liquidity. Basically, what that means is that smart money are looking to find orders that are going down and couple them with their orders that are going up. Okay, very, very simple. So smart money is looking to get into longs at this point and order pairing their orders with willing buyers beneath this or these equal lows, right? Let me just delete this for a second. Cool. So now, let's say price goes up, and that's what we label as a liquidity sweep, yeah? So once liquidity has been swept, price is now going to navigate its way higher, higher. Let's say we're in a buy program, the algorithm takes price higher. That's another conversation about all that algorithm sort of stuff. Then price runs to an old high, okay? And what we need to understand, what's really, really important, is that above every old low and every old high are willing buyers and willing sellers. So you've got willing sellers beneath this low, willing buyers above that high. What does that mean? Well, it means that, again, if you think about the support and resistance type logic and the breakout trader logic, beneath every swing low are going to be a group of traders that are looking to get short. Above every single high, there's going to be a group of traders looking to get long, right? Makes sense. So what smart money will do now, okay, once we reach this high, is it will offload their positions, okay, essentially lessening their volume, and they're going to do that at what? Counterparty liquidity, where there are willing buyers above a high, okay, and that's where they're going to go ahead and exit out of their position, right? And then the whole process starts again. It could drop down, CSD, run for this low, etc., 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 right? And technically speaking, as you can sort of see now, regional consolidation, first stage accumulation. Basically, what I'm referring to is a market maker sell model. Okay, so the reason I'm even pointing this out is because it's really important to actually understand what's going on behind the trade, not just we swept liquidity, now price should go higher. Like, what is the reason? And when you really lay out price like this with the causation, with what's actually happened, the forming of liquidity, the sweeping of liquidity, and then actually thinking about where does this liquidity want to get distributed to, it really starts to make sense, and you will actually notice that your trades will have a lot more reason and logic behind them. Okay, for example, right, let's say we ran out this high here, right? Once we run out this high, price is going to retrace. Why is that? Because smart money has let go of some of their orders, okay, and the algorithm is then going to seek again some sort of fair value, mitigate something else, etc., etc., or not mitigate, but go ahead and reach for some sort of inefficiency and then run higher, right? Why is it still running higher? Well, we have higher targets, for example. Okay, makes sense. So what we're going to do is we're going to go ahead in the chart. I'm going to show you an example of this inside of DXY/EURUSD. We're going to go ahead, break that down from the smart money logic perspective, and hopefully you will see the trade in a different light.
All right, cool. So here's the top down. So if you do follow my weekly outlook, which is free inside of the Discord, you'd know sort of I was unsure at the start of the week where we were actually going to go. Now, I just wanted to basically let information play out and see if we could formulate something. So Monday ended up closing, right? And Monday, a lot of the time, will give us a lot of information with regards to the rest of the week. So, for example, Monday created this in-bar day, but more importantly, it left this FEG. So the fact that it left this FEG, we can now have a look and see how we want to interact with this FEG, plus the previous day's low, which was going to be that liquidity, so that order pairing. And we'll be able to see, okay, cool, are we running away from this level? Is smart money showing aggression away from this with sort of like displacement, V-shaped recovery, all that good stuff. So that's basically the frame, yeah. And this is previous week's high as well, which if you've seen any of my daily bias stuff, you would know that I really like looking at previous week's highs, previous month's highs. I actually did make a document going around sort of like my 3 favorite simple steps to determining daily bias. If you want that, it'll be the first link in the description. Anyway, so we go on the 4-hour here. Okay, and you can see how this leg was very aggressive. This was NFP leg, very, very aggressive to the upside, and then we consolidated, and Monday consolidated too. So let's just jump down a bit more. So on the hourly here, you can see, look, we have the equal lows and the equal highs. So we have willing buyers and willing sellers, right? So we're basically waiting for price to go ahead, reach for a low or a high at specific key time of day, okay? So let's have a look what happens here. So it taps, but this is at 4 a.m. So this is actually Asia session, right? This is my stuff's on London timing, so if this was 3-4 a.m. Eastern Standard Time, that would be great, but it's not. So this is Asia. We're gonna wait for London, okay, and then notice the aggression. So this down close candle, right? If you really think about it, where we have these equal lows, this down close candle is really sort of checking that green flag for those breakout traders saying yes, enter, like this is going to go down, this is going to drop. So ideally we want to spend as less time down here as possible, right? As typically we want to see aggression away from this area. That's sort of what I like to refer to as V-shaped recovery. Okay, so let's have a look what happens. So 8 a.m. comes in, bullish closure wasn't too aggressive, which is fine. And you can see we slowly proceed and go higher. Great. Okay, so that was what London session. So let's actually have a think what's happened here. So liquidity has been taken. Okay, check. We understand that this liquidity pool, which was, again, if you think about it, is previous day's low, right? That's the other thing. So where this low looks insignificant, the idea that this is actually previous day's low is what gives it a ton of context here. Okay, let me put this as this, right? So liquidity pool, let's just label it as that. So liquidity has been taken. Now, where is this liquidity likely to get distributed to, right? Now, typically you're going to use time and price to help you figure this out. And key tip, just look at the end of the session. so the end of the kill zones is basically my hint. But let's just see, like, where would smart money, if you were smart money and you'd gone ahead and paired your orders with lows, right, where would you look to distribute your positions, right? Well, we have swing high, right, willing buyers, and willing buyers, right? You have equal highs here, which is really nice. I know some people are going to say, oh, well, isn't this a swing high? Yes, technically, but these highs are very pronounced, right? They're very easy. It's very quick to spot. 1, 2, 3, okay? So as you can see, we're in between sessions here, and this is why you get that sort of lack of volume. Now, the next 15 minutes is going to open up, right? The kill zone is going to start, and technically the kill zone can actually do a sort of power of 3 type thing, right? Where it's going to go ahead, reach lower first, and then go higher. And that's something you can go ahead and back test yourself in your own study. What happens here? Well, we go lower, right? Again, accumulating more liquidity. So this is more on the short term. But we understand, again, that this liquidity pool has been swept. We have all these breakout traders here. Maybe these breakout traders are thinking, yeah, price is going down now, so they're going to get back into profits, right, which they were for a very short period of time down here. So let's see what price does. Okay, and I'm going to put let's say some liquidity signs above here. Okay, so smart money's paired orders, looking for price to offload, or sorry, looking for smart money to offload their positions at old highs. Okay, so you can see the aggression away from there. Right, and the first high gets reached for, right? So some of the liquidity gets taken off, for example, right? And typically at that level, you're going to get some sort of retracement. Where could price retrace into? Well, we have what? A nice breaker here, plus FEG. So again, the algorithm is going to look to balance fair value gaps as it's slowly progressing higher. Again, switching from that sell side to that buy side delivery. Plenty of liquidity taken. Now you might say, well, could this now just reverse? Like, how do we know what's going to happen next? That's due to your own study, right? So in this context, the daily bias, right, and my daily cycle would point up to me, right? That's how I'd navigate this. And also, New York is very early into the session, so it still has time to run. That's how I would personally look at this, right? But again, that's going to differ based on your strategy, based on your key times, how you look at everything. So let's see what happens. So we take that high. Every time we do take liquidity, you don't have to anticipate a retracement, but you have to allow for the ability for price to retrace. That's how I look at it. So every time we do take out some sort of liquidity, price could turn around just slightly and then continue higher, right? However, if we're like going for, let's say, the major target, then price could full on reverse, right? If that is what the bias is sort of, or let's say that is the framework of my bias. So anyway, let's see what happens here. So we retrace, we fill 1, 2 FEGs, nothing really lower here, breaker hit. What do we anticipate now? I'd want to see speed to the upside, okay? Right, notice how we're respecting this 15-minute FEG very nicely. Nice bullish closure. And then beautiful move to the upside, right? So again, another liquidity pool tagged, right? So we had a nice move to this liquidity pool. We then drop lower. Now, New York session has actually finished, right? And now we get into London close. So for this set cycle, and that's something I didn't really mention, is that I would anticipate price to run to the end of London close, okay? So let's actually just mark up London close. So this is where you're going to use time to understand where price is likely to continue to, pretty much. So I would anticipate price to run to the last 15 minutes, half an hour of London close. That would be sort of my golden region. So let's have a look. So we respected price. We've gone ahead, reached for a high. If you were in this, obviously you're going to take partial out each high, etc., etc. Okay, so what does price want to do? Well, remember, we're in that buy program. Price is going to look to refill some sort of imbalance and then continue to the upside. There we go, right? So we run for this high. Okay, and what time is that? About 30 minutes before London close is about to finish, right? And then notice the retracement, yeah? So With this, we understand that smart money went ahead, paired their orders beneath these lows at key time of day. Okay. Then during, again, key time of day, price came down, expanded. Price expanded during key time of day. Price finished its leg during key time of day, right? So that's how I personally measure the expansions. A lot of the time you're going to have targets, but you want to marry that up with timing. And again, understanding that each time smart money gets to one of these highs, it's offloading their position. So look, ideally at the start of this day, I would have wanted to see this guy high get ran for, but due to the timing of it, it didn't get there, right? And see, notice what happens afterwards. There, look, we retrace, we bang around. I'm not holding through that, yeah? I'm only interested in the time-based move that I know is going to go ahead, reach for my target, and then, again, if you want to leave like a small runner on, that's different. But the majority bulk part of your position, you want to get off at these key highs, at key times, and you want to marry it all up. So again, understanding, we had the daily BISI, price came in aggressively during key time of day, right? London a lot of the time is going to be low of day. Price then expands. What we're going to anticipating during New York. So in terms of my daily cycles, I'd be calling for New York expansion. Okay, again, just looking to get on side with a fair value gap or your breaker or propulsion block, mitigation block. It really doesn't matter. OTE, right? You could just have your OTE from low to high. Boom. Right, it really doesn't matter how you want to go ahead and enter. The important part is understanding where smart money got in and where they're looking to offload their positions. Okay, so anyways, hope you guys enjoyed that video. I hope this provided a good sort of basic understanding of where smart money is looking to get in and then how they're actually looking to offload their positions. So yeah, if you have any video suggestions, go ahead, drop it in the comments below, and yeah, see you like the next one.